Welcome back. It's time now to take a look at the top business stories. UAE makes more oil and gas available to international markets. Dubai's Department of Finance launches $800 million securitization plan. And Portugal set to tap EU bailout fund. Let's look at the equity markets first. The UAE stock markets headed in opposite directions today. Dubai's benchmark fell 0.1% to close at 1,555 points. The banking sector posted the largest losses, with Dubai Islamic Bank plunging over 4%. Emirates MBD, on the other hand, was up 2.1%. Again, Dubai Refreshments was the top performer with a plus of nearly 15%. Ema Properties was up 1.3%. DU, on the other hand, fell by 0.3%. 136 million shares were traded, valued at 207 million dirhams. And over in the capital, the ADX rose 0.2% to close at 2,597 points, with the real estate sector posting the largest gains. Alder Properties was up 2%, Ansur Real Estate 1.5%. Dana Gas also gained 1.5%. The banking sector was mixed, while Abu Dhabi Commercial Bank was up 0.8% and First Gulf Bank rose 2.8%. Abu Dhabi Islamic Bank dropped 7.1%. Bank of Sharjah was down 0.5%. Also, Etisalat dropped by the same amount. 141 million shares were traded, valued at 228 million dirhams. And let's now look at the GCC markets, which ended mainly higher today. To talk a bit more about the GCC markets, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Good to be here.
We just had the board up with the GCC markets. Which one looks the most promising at the moment and why?
Well, right now I'd be watching Qatar, Saudi, and the UAE, particularly Qatar, which looks the best right now in regards to trend. This week it trended higher, and it looks like it'll get above the high of the year. Qatar and the UAE have both been pretty stable during regional unrest. And Qatar specifically is spending a lot of money on new infrastructure, which will be very good for the economy and many of the companies there. If we look at the UAE, it's been going sideways since last week. That could continue for a little while. But if the move is up out of this consolidation phase, then the UAE is likely to see further upside as well. Now, Saudi Arabia has rallied very strongly over the last 5 weeks or so after hitting a low back then. But now it looks like it's starting to run out of steam. So I'd expect to see a little bit of a pullback and some further consolidation in Saudi. But given the behavior in this recent rally, that buying strength could come back after a period of consolidation.
Let's look at Europe. Portugal is tapping the EU bailout fund. Finally, it's official. What do you think? Will market jitters sort of calm down? Will we see yields dropping?
Well, this announcement was anticipated by the market, which is why you don't really see much of a reaction. The next country on the list of concerns is, of course, Spain. And Spain's economy is much bigger than Ireland, Greece, or Portugal. And, what's going to happen with Spain is going to be very important. Now, I think now many economists are starting to expect Spain to survive without a bailout. Goldman Sachs this week came out and announced that they don't expect any other European countries to apply for a bailout. And the bond markets seem to agree. This week, Spain sold some new debt, the first since the beginning of the month, at a much lower interest rate than that last sale. So that's also a positive in the euro market.
So everyone's calming down.
It seems so a bit, yeah. Until we have another surprise, if that's going to happen.
Well, hopefully not. We'll hope it stays that way. Thank you very much for coming in. Have a good weekend. And now to our top stories. The UAE's Minister of Energy, Mohammed bin Dahen Al Hameli, has stressed that continued supplies of crude oil and gas are being made available to international markets. Countries with spare capacity, including the UAE, have made these additional supplies available. At the 12th International Oil Summit in Paris, the UAE energy minister said that they must nurture global economic growth with increased supplies of oil and gas, but there's little that can be done in terms of price control. He added that international oil markets should pay more attention to real supply. The Department of Finance in Dubai announced the launch of an $800 million 6-year securitization plan by selling future SALIC toll receipts today as collateral. The Department of Finance said the $800 million will be used to support the Roads and Transport Authority's infrastructure projects. The Commercial Bank of Dubai, Citibank, Dubai Islamic Bank and Emirates NBD are mandated lead arrangers and book runs for the financing. The bond incorporates both a conventional and Islamic tranche. And in our fast financial news, the National Bank of Kuwait negatively revised its growth forecast for the Arab Gulf region. The GCC's gross domestic product will rise only 4.5% instead of 5% this year. This comes off the back of the latest developments in the Middle East region as well as the earthquake in Japan. The 8th Middle East Forex Expo and Conference will open its doors tomorrow at Emirates Towers to showcase the latest products, services and trends in the industry. Organizers say the event will allow the general public to learn strategies for pulling profits from the currency markets, with more than 30 international and local companies exhibiting. The event is free for the public. And after the break, we will run you through what's making the headlines in international business today.